I'm Kymber Lovett-Menkiti, CEO of Keller Williams Capital Properties and Catalyst Partners. And today we're going to dive into 3 impactful ways that you can build wealth in Washington, D.C. this year. Let's get into it. Number 1, buy where you live and let DC's appreciation do the hard work for you. DC continues to be a market where demand outpaces supply because people don't just move to DC. They often stay or retain their properties in the broader DMV area. Government, tech, healthcare, education, this is one of the most recession-resistant economies in the United States. Buying your primary residence is still the fastest way to start building wealth. So this works because DC has seen steady and consistent appreciation. You lock in your housing expense, you benefit from tax advantages like homeownership, capital gains exclusions, and ultimately, you're literally building wealth while you sleep. So let's unpack this a little bit. There's actually never been a 10-year span in US history where real estate has not appreciated. This creates a very consistent and stable and reliable asset to build your appreciation. National averages annually for appreciation for a property are 3%. Guess what? In DC, over the last year, this average was closer to 5%. Let's unpack this example. So if you're buying a house in Bloomingdale's, $700,000 Northeast DC, right? You purchase that property, and we're gonna unpack the power of leverage. Because if you look at even modest, 4.5% appreciation, that was DC's average annual appreciation over the last 10 years, you're gonna build 6-figure plus of wealth just by owning this home. So what does that look like, right? You buy a $700,000 house with 5% down, right? Your down payment comes out to $35,000. You pay that $35,000 down payment and you control the $700,000 appreciating asset. So after 7 years at 4.5% annual appreciation, your total wealth gain is approximately $251,000 in appreciation. You also then had another $40,000 that you paid in your mortgage pay down, right? That's the principal pay down, not including the interest payment. That is a total equity of nearly $300,000 in equity created just from the house that you lived in. You were literally making $300,000 while you slept. Now let's calculate the return on the cash you invested. This is where it really gets good. So your return on that $35,000, right? $291, $35,000 was an 831% return on the cash that you invested. Because remember, your down payment was $35,000 and you got the asset appreciating of the full $700,000. So even though you only invested $35,000 out of pocket, you earned appreciation on the full $700,000 home value. That's what makes real estate such a dominant wealth building vehicle. You control a large asset with a small initial down payment investment. Appreciation compounds on the full amount. Your mortgage payment quietly builds additional equity for you every single month. And your ROI, your return on that investment, grows dramatically over time. Even at our modest appreciation rates, your wealth accelerates and becomes leverage, which multiplies the return on that investment. So bottom line, right, even with our modest investments, that $700,000 home can create nearly $300,000 in wealth for you in just a 5 to 7 year period. Your returns are amplified because of the power of leverage. Real estate gives you automatic compounding wealth, literally just by living in your home. It may be slow and steady, and yet it's incredibly powerful. As I talk to people in the market, they're often asking, how are people moving up into these large 7-figure plus purchases? And the answer is that they're often leveraging the appreciation from an early investment that allows them to drive forward and to continue to take that investment, rolling it into larger and larger asset, building more significant returns. So if you're renting this year, the very first way that you're gonna start on the wealth building journey is to invest in home ownership. Even if our interest rates aren't exactly where we want them to be, you have an opportunity to refinance in the future, and you can go back and refinance. You cannot go back and get the appreciation opportunity that you missed. So number 1, Leverage the power of appreciation in the city you're already investing in through the purchase of real estate. All right, our second strategy, turn your home into the income generator. You already own your home. You're like, I got you, Kymber. I already got the home. I'm already investing in the appreciation. House hacking is one of the most powerful and accessible wealth building strategies available to you, especially for first-time homebuyers, young professionals, and really anyone that wants to fast track their way to financial freedom. And the beauty of this, you don't need to wait until you have extra money to start this investment. You can do it right now, the minute that you own that property. So what does house hacking actually mean? House hacking is when you live in one part of your property and you rent out the other part, very simply, right? This can look like renting your basement rental. It can also like renting a spare bedroom, having a duplex, triplex, or fourplex, which I absolutely love, which means you live in one unit and you're gaining the benefit of the income from unit 2, 3, or 4. You can also convert a garage or an ADU into a rental. Some of the jurisdictions have different requirements. We'll unpack that in another video, but those are all ways. These create long-term or mid-term rental strategies, which can allow you to track different renters that have different needs as they're coming to the DMV. When you think about our area, these setups are incredibly common because the housing stock lends itself to it, especially in our classic DC row homes that have naturally built in lower level basement rentals. So why does this do so well in the DC market? Well, number one, DC is a magnet for a lot of transient opportunity. You've got government, military, Hill staffers, traveling workers, grad students, summer interns that are coming to DC for just a short period of time. Rooms and basement units rent fast and they often stay occupied. They create an opportunity for strong monthly rents. For example, a basement apartment, think back to our original example, right? We've got our Petworth, Bloomingdale row house. In that area, that rental unit could easily rent for $1,500, $2,000, $2,500 per month. If you have a single furnished room that has access to maybe some common areas, that could go anywhere from $900 to $1,500, depending on location, proximity to metro, and other amenities. In our area, let's be real, we've got a high cost of living. You've got that advantage. And because of that, our home prices are higher, making rental income the opportunity to offset a portion of your monthly mortgage, creating a real opportunity to drive additional income into your household. The wealth impact of house hacking is real. So go back to our original example, right? You've got the $700,000 row home that has a rental basement unit available. Your mortgage payment, $4,800 a month, right? We're gonna estimate that based on today's rates. And then you get another $1,900 a month coming in on that rental. Now your effective housing cost has dropped to $2,900 a month. That's incredibly affordable. You reduced that monthly expense of your housing, thereby creating an additional cash flow that you can use for investing opportunities. The fastest path to save for your next investment property is to leverage that savings into another investment opportunity. When you reduce your expenses, you are gaining. You're gaining appreciation, because remember, we're getting appreciation on the full property value. You're getting equity from your monthly mortgage payments. This is how first-time buyers become investors in the DC market immediately. And the real power move is to repeat it. Here's the strategy that many wealth builders use. They're buying a home with a rental component. They create a house hacking opportunity for a year or two. They refinance. We'll talk about that. It's really good, right? Because now you've got that rental opportunity. You might refinance into a different rate. And now you're being able to even continue to reduce that overall monthly payment. And now you've got the setup to either move into a next property or do it again and have an investment. You can convert that first home into a full-time rental or moving into the next one and leveraging that appreciation to continue to have it go forward. So this is how people move from one property to 5 without massive cash out-of-pocket expenses. This is why house hacking belongs in one of your top wealth building strategy moves for this year. It solves one of the biggest barriers for entry for new buyers. It lowers your cost of living and it builds wealth at the same time. Instead of waiting to be ready, house hacking lets you get into the market sooner. You own a property sooner, you start to become an investor sooner, and you build equity faster. Let's dive into the third strategy. Invest in neighborhoods before they peak. DC and our surrounding areas move in waves, and this is how people are building wealth. they get in before a wave crest. This year, there are 5 areas that I'm keeping a close eye on. Number 1, Congress Heights. With Amazon, infrastructure, and rapid redevelopment, it's on my list. Ivy City, you have retail growth, residential investment, proximity to the city, and a lot of action. That's one to watch. Deanwood and Marshall Heights, you've got the combination of affordability and transportation access that make that a neighborhood that should be on your list. Moving into Maryland, Hyattsville, and Mount Rainier, you have an incredible art scenes, mixed-use growth, the university, all things that make that a neighborhood to pay attention to. Moving over to Virginia, you have Tysons and Reston in Northern Virginia. You have continued tech expansion, and if you're looking for the perfect moment, these are ones that you want to watch before those neighborhoods really start heating up. The opportunity isn't in following the headlines, it's actually spotting the momentum and taking advantage of that. Here's the ultimate bottom line. Wealth is not built by accident, it's built by intention. And if you're living in the DMV, you're standing in one of the most opportunity real estate rich markets in the entire country. The 3 strategies today we covered are not just theories. They are the exact strategies that people are using to level up their money and their freedom and ultimately their future. This is your year to build boldly, your year to create momentum, your year to make your wealth building a strategy and not just a resolution. If you're ready to stop the scroll and start building, book your wealth building consultation using the link below. You'll get a personalized strategy that locks in your next steps that allow you to build the kind of wealth that lets you live your life on your terms. So hit the subscribe button. You don't want to miss the strategies that we'll be dropping every single week. Tap the bell. That'll let you be the first to know when a new wealth building episode drops. And drop me a comment. I'd love to know which wealth building move you are committed to in the upcoming year. So let's start building. Look forward to seeing you next week for our next episode.